Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It is June 13th. This will be our chart lesson for today, and this is going to wrap it up for the week. No chart lessons on Friday, so another range day today, real tight. There's a couple of trends back and forth. Just about every one of these entries you'll see are reversal type patterns. Um, Once we kind of had the range in play, this was not a bad entry right here. Um, but not a lot of entries today. Just basically another quiet day. We still have not filled the gap yet. We got real close. This is where we closed yesterday. This is where we opened today, the yellow line. So prices have tried to close that gap, and we still haven't quite got there. Wouldn't surprise me if we dropped on down there here before the close at 3:15, which is about 30 minutes away. I'm doing this a little bit early today. I'm trying to do these earlier when I can, just so I don't have to be here as late. If I wait till 5 o'clock to start them, sometimes I'm here till 6 or 7 o'clock. These things take about an hour, at least an hour of my time, sometimes more, because the video itself's 20 minutes or so, usually 20, 25 minutes, and then have to process it and then upload it. And so there's a lot of work that goes into these videos. So um, they're not just easy to do. I know a lot of times people say, can you do a video or do a chart lesson on this market or that market? And it's hard enough to do one a day, 4 days a week. So it's just really hard for me to do another one. But every market's the same. Each market, I mean, the price action, what we do here works in every market. It works exactly the same. It works the same on every level. If you went to a daily chart, it'd work the same way. You probably will have to adjust your uh, you may have to adjust your chart size depending on the market you're in, and you also may have to adjust your targets and your stops, because even though the price action works the exact same in every market has its own personality to some degree. So 4 ticks is the key in this market. If you went to, let's just say, if you wanted to trade oil, a lot of people like to trade oil because when it takes off, it moves really quick and it moves long distances. So if you want to trade oil, you may need a uh, 12-point stop, and you may want to go for a you know 20 or 25 tick target. Don't go use those. I mean, I'm just throwing out some numbers there as examples. So I don't trade oil, so I don't know what the key. It may be 4 ticks in oil too, but I doubt it, because oil moves a lot quicker and has much bigger moves. But that's the beauty of the of trading this market here, is it's um, there's two different things here. You'll get some slippage in oil. Rarely do you ever get any slippage in the ES here. It's just so much volume, especially during regular trading hours. Now, if you trade at night or in after hours or whatever, you may get some slippage. But if you trade the regular session hours, it's rare that you're going to get any slippage. Sometimes on really, really volatile days, uh, there's a chance you might get a little slippage. But even then, it's rare. So seems like we've had a couple of days this year when it was really, really volatile, where there was some thin spots where occasionally you would get slippage, but generally you won't get slippage in this market. So, but other markets are not the same, and that's why most professionals like to trade the ES, because there's plenty of volume. You can trade 100 contracts really for the most part and not have any slippage. There's not many markets you can do that in. You couldn't do that in oil. If you traded 100 contracts in oil, you would probably affect the market to some degree. Um, Maybe not more than a few ticks, but you could affect it. I'm pretty sure with 100 contracts in oil. So um, anyway, didn't mean to get off on that tangent, but I thought it was something we'd probably be worth talking about. But let's talk about the trades. It was slow today. You had to be patient before you really got your first trade. There's not a lot of trades. Generally what you want to try to do is get short off the resistance and long off the support. And again, you didn't have that real consistent turning area except right here, and you had one off the top, and you really didn't have any. You kind of turned it. This generally turned out to be the lows for the day, but you can see we turned at different places. It wasn't consistent, so it makes it a little harder. So really, what you had to do is just wait on your little. This is a reversal. This coming down is a reversal. This is a reversal. This is not, but this is a reversal, and I marked one other trade there. So they're mostly reversals, and that's really all you had to work with today, unfortunately. So back out just a little here. But 7 o'clock came right in this little area, right around in here, coming down here, and then we just went sideways. There was a second entry long here, but there's a lot of overlap right there. If you went long right there and you got stuck in this, as soon as you got a chance to get out with a tick, I would have exited. I mean, even if you'd have given it a little room, I mean, if you entered here, generally you want to put your stop under here. So you probably would have got stopped out of that trade. But I don't like it from the get-go just because you've already got 3 bars kind of stacking up there, and you're really going long right into these highs here with this overlap. And past that point, it's easy to see that you shouldn't get in. It might have been easier to get fooled right here, but on out here, there's no reason to get fooled. This is tempting because this is that little break that sometimes that's a big bullish bar, but you got to go long right into the resistance area of that little trading range. Congestion, however you want to call it. Basically, congestion is just a smaller trading range, so I'd probably call that congestion. But anyway, it shoots up. You get a first entry short, a second entry short, and so you get a chance to go long here. Again, not a very good. You generally want to see it come back and test this and test the EMA and give you a little room first, but you don't have it. But it is a failed second entry short. And here's another thing too. This is your signal bar. I get people all the time that ask me, why didn't you go long right here on certain trades? Since this was a failure, it really wasn't a failure till it broke above this bar, so it would be okay to go long there. But your stop still goes below this bar. But generally, you won't want to trade that way. Generally, your signal bar is always the highest bar in the swing or the lowest bar in the swing. And you want to stay away from inside bars for the most part. This is a little different because it's a trap and a failed second entry short. But let's say you're going short up here. This looks like a great signal bar. We're still a little ways from the EMA, but you don't want to be entering one stop below that because this is your signal bar. The entry is 1 tick below it. And you'll be shocked and amazed at how many times once it breaks lower there, it'll only get 4, it actually has to go 6 ticks to scalp out because you use 1 tick to get in because your sell stop would be 1 tick below there. So there's 1 tick. And then it has to move 4 ticks, so then you've got 5. 4 plus the 1 that you used when you started. And then usually it has to tick through a limit order to get out. And so usually it takes 6 ticks of movement. And you'd be surprised how many times the market will get exactly enough ticks to scalp out, and then it backs up. And so you can't be a tick late, and you don't want to ever be early either, really. So the idea is to always go short 1 tick below the signal bar, and that's the signal bar. Well, that's way too bullish. So even though that looks good right there, you can't be entering over here. The only thing you might do is let it break lower right there, and as soon as it does, drop your limit sell order 1 tick below that bar. Now you might do that. I'm okay with that if you still like the trade when it does that. If you can get in that way, then I'd be okay for you to wait for a break of this bar to enter. But you can't put your sell stop right here because now you've lost 2 ticks, plus you lose a third one putting your stop there. So you've already lost 3 of your ticks in your move, and it takes 6. So you may not have enough room to get out now. So keep that in mind. I get that question more than anything. I had somebody yesterday sent me an email, or it might have been this morning. I think I answered it this morning. But basically he was asking me about several trades, and several times he was using either this bar or even this bar. And this is your signal bar. This is the only one that matters right here. So, and if you're coming off the lows, this is your signal bar. And that's way too bearish to be going long above, especially when this is just an inside bar. Even though that's pretty bullish, it never breaks above. And so it's just an inside bar, and they're not as reliable. So keep that in mind. But anyway, we just started kind of going sideways here. But look how many times we tested that. Once, twice, and then finally a third time. And you really get a double test right here because you made that high, you tested it once, you came back and tested it again. But I don't like that signal bar. But when it came back again and tested it, and it actually broke higher and then turned and went out the other side, I don't have a problem having a sell stop right there because you can see we're not getting above that. That resistance is held. We're probably going to the other side, which at that point, I probably would have had my line right here, but you still see you got plenty of room. So I ended up adjusting this as the day went on. But early on, I probably would have had it right there where the current price is trading. So this turns out to be a great trade. If you catch this one trade, you're probably done for the day. So especially if you're using a runner. I don't know if I would use a runner on a day like this. Generally, when I want to use a runner, it's when you know you got a strong trend and there's a chance to get a runner. Generally, when market's real tight and choppy like this, you're not going to get many runners. Just the way it is. Now, if you can get long off the lows or short off the highs like this right here, you might try to get a runner because it's worthwhile. Because if you catch that one trade with a runner, you're probably done for the day. So just keep that in mind. Then, of course, we bounce off this low. We actually had these lows here, so this is almost like a little failed break lower. And then you get a first entry, you push through the EMA, pull back, you get a second entry short, it fails. It actually goes lower and turns. I like going long one tick above that bar. You could have actually waited on this one and gone long above it, but you can see it's kind of into the other side of the trend channel line. So really, I think the better entry was to go long here. It actually comes back again, but the fact that it didn't take on off and go on up after that reversal, I wouldn't take a chance entering again. You can see here, you really couldn't get in this because it gapped over and came up. And if you'd have waited on it to come back, sometimes that's a good trade, but generally it's really hard to watch to try to get filled with prices coming back. Most people can't do that, not consistently. They'll get shook out of a trade, and in this case, you would have gotten stopped out on a loss. So then we get another reversal in the other side. Notice you get a leg down first entry, a second leg down second entry. It fails. You still got room to get out before down here. If it turns down right there, we're probably going on down. And of course it does. It actually comes back again, but your stop would have been good. And you could have considered going back in here, but you don't have much room now. It actually broke higher and turned down, so you'd have to go short here, but you're losing a lot more room than you had over here. Now you don't have much room. And so I'd skip that trade, but it's a possibility, but I'd probably skip it. And then watch what happens. You get a little failed break lower, and you get a first entry, second entry, and so another reversal pattern that confirms the trend line just like it did over here. This actually confirmed that trend line. I don't think I said that. Coming down, this confirms that trend line. So another reversal right here. Not a perfect bar, but it's more bullish than bearish, and it's a reversal, failed second entry short, so we don't care that much about the signal bar. If it breaks above it, we're going with it, and you can see how quickly it shot up. It took it a minute to get going. But it did shoot on up. This one, again, is tempting. But that high, there's really a double top right there almost. So I'm not as crazy about that one. If the last high was way up here, I'd probably say you might risk that one. It would have worked, but I'm not crazy about it. And of course, it looks like we're going to get another reversal, but we don't. It never breaks lower. And it just turns and goes back up and makes that high and tests that high. So now you got this trend channel working up. You get a break. 2 legs up to a new high, and it actually was trading way up here and turns and goes out the other side. You could wait on that to close, but I just think a sell stop right there. And a lot of times it's better to wait on the lower high, which you get that right here, but I don't think you want to enter right there, right into the EMA. You want to make sure this thing is going to push on, because it could push back up one more time. And notice how it does. It just kind of goes sideways. You never would have got stopped out of that, but it's just still not a good entry. And then you get your second entry long. It fails. So when you break lower right there, boom, off it goes again. So another reversal right there on a failed second entry long. You actually, technically, there's a failed second entry right there, but that really is all still part of one move. Even though it ticked higher right there, I just consider that all one move. Because you can see that's one leg down and then a second leg down. And that's the whole idea, is after 2 legs. And so then there's your failure right there. And boom, look at it go again. Then it comes back to the trend line. It confirms that trend line on a third touch with a bearish bar off the EMA. You still got a long way just to here, much less down to here. And we might even go to this low. So I think that's worth taking. Comes back. You actually get a second entry short right here. But again, this is really your signal bar. And so I'm not crazy about that one. It's just after 2 o'clock too, but sometimes if you get a little setup right there, but that's a possibility. You could enter right there since we're not down to the lows yet, and it is a second entry short. But again, your stop would have to go above this bar right here. So I'll give that one a green. I wouldn't waste my time with it, but if your chart looks a little better and you got a good signal bar right here, then you might take it. So, and that's all there was today. That got us into the 2 o'clock hour. Like I said, not a lot of trades today. Not the best trading day, certainly not the worst. But you just had to be a little patient, especially early on, because really your first trade wasn't until 9 o'clock. That's hard to do, to sit here from 7 o'clock if you start like me at 7 and sit here till 9. It's hard to do. But I'm going to tell you, if you try to force an entry, all it'll do is haunt you, because that's just how it works. So here's a good example. Here's a first entry, second entry, but notice how everything's still finding support on that EMA. There's also the low right here, so you don't have much room down. You go short right there thinking you've outsmarted everybody, and it comes right up and stops you out, and then goes straight where you thought it was going to go. So you just have to sit and be patient, and if you are, usually it will pay off for you. So of course, that's a horrible signal bar too, but if you're looking at it like a failure. But here's the thing, it needs to look like 2 legs. Not always, but you got to look at the context, and that's definitely a nice leg down, and that's just barely even a move down. So that doesn't look like a 2-legged correction, really. It just looks like you're going sideways more than anything. So anyway, that's going to wrap it up for today. It's going to wrap it up for the week. We'll be back Monday, but I'm going to wrap it up and start. I'll probably trade an hour or 2 tomorrow and start my weekend early and get out of here early. And I'm going to try to do the same thing today. I'm going to try to be out of here by 5 today. So I know that's not early, but that's early for me. So anyway, going to wrap it up. Hope y'all had a good trading day. I'll see you next week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.